Hey everybody, I'm Mike Desepoli and welcome to the Heritage Monday Morning Market Minute for April 12th, 2021. Let's take a look at a couple of our key market drivers as the markets are firmly into the second quarter now with earnings season just around the corner. Big news event this week was Fed Chair Jerome Powell was on 60 Minutes last night. Now, the bigger question to me is why does the Federal Reserve Chairman even need an appearance on 60 Minutes? But I think that speaks to how the media frenzy surrounding interest rate and monetary policy has really grown over the last couple of years with the Fed's involvement in these markets. So aside from the fact that we don't think it's necessary for the Fed to be on these type of talk shows, they did reinforce their easy money policy, right? Interest rates will remain low. They don't see any circumstances this year that would require interest rate increases and likely no changes until we get deep into next year. This is good. This is what the markets want to hear. You know, anytime Jerome Powell gets behind a microphone, we get a little bit concerned because sometimes he deviates off the script. He starts taking Q&A, and that's when the market sometimes reads a little bit too deep into his answers and things get a little volatile. So again, he reaffirmed policy as we see it, no changes in the foreseeable future. Later this week, earnings season will kick off yet again, right? Every 3 months, we get financial results from the companies in the marketplace telling us how they've done both over the previous quarter and over the previous year. The banks will be the first cohort of companies to kick off earnings season. We're expecting big numbers this year. You have to remember the year-over-year comparisons here are comparing against a very dire period, which was the onset of the coronavirus pandemic last year. So we're looking for big numbers this earnings season. We think this will reaffirm the growth story in the economy. But again, we will be watching very closely to see how the companies that we own fare and what the numbers look like as they report. And again, as far as the 10-year yield, we've spoke about that over the last couple of weeks. That was a lot of media-driven narrative about how the 10-year yield was going to come along and kill all of our growth stocks and tech investments. And there's really been much ado about nothing yet, right? The 10-year yield has carved out a decent range between 1.6 and 1.7%. And now that it's stuck in that range, the media is speaking about it far less, and they are moving on to the next thing that they will try to come up with to scare you. The last thing we want to say about that is you have to remember, folks, that the media is not your friend. They do not care about what goes on in your portfolio. They are not giving broad financial market advice through the television each and every day. That's why you need to have your own plan, stick to that plan, and don't change your goals and objectives just because of what somebody in the financial media says. So with that said, we'll be back Friday with the Heritage Market Pulse. If you have any questions, reach out to us. We're always happy to talk to you about the things that matter with your money. Have a great Monday.